So, what's good, everyone? Keely again. We are now in this part of this workshop where I'm going to cover some idea of just repeatable practices and strategies in the market. So, there's a strategy that people utilize where they are trading gaps. And what are gaps? Well, gaps are periods, or they're actually things that are created where there's a huge difference in between the closing price and opening price from day to day from each market session. So on the screen, if we think about this right here, this is Tuesday session. And then now the newest candle that are forming right here, this is Wednesday's session. So we can see that this little black, or not little, it's kind of pretty huge, this black area where there's like nothing, that's considered a gap, right? And so essentially what some traders do, and one of the easiest strategies you can take on is trading these gaps and identifying where they are and then just doing a step-by-step process of what to act. So one of the I'm going to start it off super simple about what it is. So let's say we knew barely anything, but we knew enough based on what we learned here in today's workshop about the shapes of candles, the candle types, and what we might expect. So imagine we have this gap, this open area, and these are essentially just nothing has happened in here, or we can assume that there's just this empty space, either of unfilled orders, where there's no buying and selling that happened in the trading day. So one thing that people say about gaps is that they have to get filled. Before we move further, everyone, what candle is this? The one that this candle where my mouse is over, that's red. Candle is that. That's a hammer, right? When we break above that hammer, what's up? What's good with that? What do we do? That can be a call entry, right? Or if we don't trade it, we can at least that the stock can go up, right? And so one strategy that people do is that whenever there's a gap, and that with this gap area, if the overall long-term trend is in the direction of filling that gap, so what I mean by that, in the direction of filling the gap, this is this area, and if we're in the direction of filling it, which is up, if the long-term trend is in accordance to that, that there's quite a likelihood that it really just may fill it. And where we can simplify this, and this is part of the very specific things where people need to be handheld and told exactly, you do this. This is one of those things. I'm introducing it to right now. So why is it handhold and telling? Because right now I'm going to tell you the time frame. The 30-minute time frame or the hour time frame, right? And that if the second 30-minute time frame is in the direction of filling that gap, then there could be a likelihood to just go and fill it all the way, or go to wherever the most recent high is. Either of those two scenarios. We covered time frame continuity just a moment ago, where the more the time frames, you can recognize the momentum of the stock. But if the second 30-minute time frame candle breaks above the first in the direction of this and the long-term trend is up, That is your entry. And that your entry for calls would be right here. I'm gonna write it down. Right? So the moment that the second candle breaks above the high, that's your moment for calls. And so this trade XLP, when we were on stream yesterday at the time of this recording, Wednesday, this is all we saw. And I walked through this whole trade and said exactly what it was going to do, where it was going to fill this gap and likely get to the previous high up here. With analyzing the overall long-term trend, assessing momentum, and because on the 30-minute, the second candle broke above the high of the first. That was it. And look how much we got paid off of that. And that's all I had to do. There's more information that could be telling us that was going up too, right? Because as we just learned, the hammer, there was a hammer on the 30, and we broke above that hammer, and we just went, right? If it didn't work out, we would at least not let our loss be too much and just minimal. Maybe just back to where we started the day at the open price. And that may be where I placed a sell or stop loss in the case that it didn't work out. Because no matter what, you're always protecting yourself and just putting a boundary on your trade. But if you just do the same thing over and over and you find a winning setup, and I just pointed one out here, and you're free to copy this and just look to try to see to do it over and over. Just find whatever stock's gap, see if stock starts moving in the same direction as the long-term trend to fill it, and see if on the 30-minute time frame we break through. Report back to me what your win rate is. And you should have a very strict stop loss, honestly. Because if it didn't break through, then maybe just put it that, hey, just like we were talking about in the slides, we're treating this as a job. It went up. I took profit. I took profit earlier than, well, I took some profit earlier than however long it went, but it just kept going. That's just one example. And we're just really fortunate. But this is a repeatable strategy. You can literally just do this. 30-minute time frame, gap, look for the break, make sure it's in the same direction as the long-term trend. And that's it. You said today that worked? I didn't trade today. We'll see. You know? In a way it did. Let me take those numbers. Oh, I won't take the numbers away. Don't worry about the numbers if you're asking about the numbers right now. You'll learn them. It definitely if you in our mentorship program, or I can give some more as well. But we definitely cover the full thing because the numbers are part of just what makes the strategy so amazing. And I love teaching it. I love giving more information about all of this. But yeah, I didn't trade today, but it looks quite like that, right? Where we broke above the first 30-minute candle, and in some ways, even though SPY dumped, we are in a downwards trend. Most recently, we had established an upwards trend. And just for more information, an upwards trend is established by higher highs and higher lows. Because this high is higher than that one. and this low is higher than that. So if I put a visual to this, this would look something like this. Now do people see a bit of the upwards trend that's kind of being formed here? So I drew this little green thing. I'm getting way advanced, or not. I'm not advanced, but definitely, um, there's a strategy that's here that can get real advanced that some people watching today may already know because they were part of the academy. Um, that this is just illustrating the fact of why SPY is still in an upwards trend, right? And so utilizing that same thing about the gaps getting filled, that's um, you know, that's when we broke on the 30-minute time frame above into the gap and we really started breaking above that first 30 minutes or so, we just went and filled. I'm almost sad that I didn't trade today. But I needed to make sure to, this workshop was as good as it could be for everyone. Any other questions? Was this helpful? Because I could probably go over a bunch of examples when it comes to these gaps and whatnot,